Good morning. This is Horizon's Middle East and Africa, our top stories this morning. After more than 733 days, the war in Gaza could be coming to an end. U.S. President Donald Trump says Israel and Hamas have both agreed to terms for the release of all hostages held in Gaza in exchange for Palestinian prisoners. The deal will also see Israel withdraw its troops from the devastated enclave. We will have plenty of coverage here on Horizon's Middle East and Africa throughout the hour, starting live in Jerusalem in just a moment. Then Dalia Fahmy, Director of International Relations and Diplomacy at Long Island University, joins us on what this deal means for what is being described as lasting peace in the region. And a little later in the show, Nadia Martin Wiggen, Director at Svelland Capital, joins me to dig deeper into the impact on oil prices as traders focus on those cooling tensions in the Middle East. It's just gone 8 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. It could be a watershed moment in this part of the world. Phase 1 of that Gaza-Trump deal has been approved, and this has been verified by all sides. Israel, Hamas, Qatar, U.S. all celebrating the fact that phase 1 of this Gaza deal has now been approved. So we're going to talk more about the implications on the markets. Not a noticeable impact. However, you are seeing oil pull back a little bit this morning. Oil down about 0.5%. There was a mild bit of geopolitical premium priced in, and some of that has been taken out. But again, reduces, at least for the time being, some of the heat, some of the geopolitical tension that exists in this part of the world. As for other markets, you can see S&P futures trading sideways. We have China back online today. They've come back with a lot of momentum, I should say. And of course, one of the stocks in focus has been HSBC. They've announced that they're privatizing Hang Seng Bank. We'll talk more about that later in the show, too. European markets dipping down 0.2%. Keeping an eye, as we have been for the past week, on political developments in France, with the French President Macron saying that they could be appointing a prime minister as soon as Friday, or at least by the end of the week. So again, some progress, you could say, for the time being in France. And then gold still above $4,000. We're slipping marginally this morning, up 0.3%. But the theme there, of course, has been going from strength to strength to strength. Not just gold, but other metals as well. We're seeing it with copper, with aluminium. We're going to talk more about that on the show later, too. But back to our top story. After more than 2 years, the Middle East could be at its closest moment yet to ending a war that has devastated Gaza and destabilized much of the region. President Trump says Israel and Hamas have now agreed to terms for the release of all the hostages held in Gaza. In a Truth Social post, Trump says they will be released very soon, with Israel withdrawing its troops to an agreed-upon line. The U.S. president says he will probably head to the region in the coming days and told Axios he may deliver a speech at the Israeli Knesset. Let's go to Jerusalem now and speak to Bloomberg's Dan Williams. Could be a major turning point in the region. Dan, the war has been going on for just over 2 years now. What do we know about what is included in phase 1 of the deal?
Good morning. Yes, indeed, a very consequential day. It would appear that at least the first stage of that ambitious Trump peace plan is at hand. That first phase would require Hamas to release the 48 remaining hostages, 47 of them from the October 7th, 2023 attack, which triggered this war, a war that ignited several other fronts in the Middle East. In order to enable that, the Israelis would withdraw, or I should say redeploy, to new tactical lines within the Gaza Strip. And once that stage is complete, there would be a responsive release by Israel of 1,950 Palestinian prisoners and detainees, including some 250 serving long sentences for attacks on Israelis going back decades. That's the first stage. The peace plan requires down the line effectively the dissolution of Hamas, its disarmament, its replacement with a different interim administration in the Gaza Strip, and various measures, including an international consortium for that enclave's long-term rehabilitation and reconstruction.
Dan, how does this peace plan differ from the ceasefire proposal that the Biden administration put forward over a year ago? And as we know, that ceasefire lapsed a couple of months later. How is this one different in nature from what was offered by the prior administration?
I think there is a difference in the small print always, but I think really what the difference is here is in the circumstances. We're at a different stage of the war. As you noted, it's 2 years old. The Israelis have made significant advances since militarily, operationally, even in terms of statecraft, you might say, in terms of their positioning in the Middle East. There was that 12-day war in June against Iran, the main sponsor of Hamas, and Hamas-aligned enemies of Israel in the region. So I think there is also just exhaustion certainly among Gazans who've seen their territory shattered during this war, among Israelis as well, and also among stakeholders in the region who might previously have straddled the fence in terms of an end to this war. I'm talking specifically about Qatar, albeit a power that had mediated previous truces, Turkey, a NATO power very close to the United States, while at the same time hostile to Israel and with open channels to Hamas. It would appear they all decided this was the time to come together and support the Trump plan. A lot of this is also the sheer force of Trump's personality. He unveiled this plan only a week and a half ago, and I think not coincidentally, tomorrow, the Nobel Prize Committee is meant to announce who will receive the Peace Prize, the coming Nobel Peace Prize. And I think Trump, among other things, and again, this would be secondary to ending the war on a sheer humanitarian basis, would like to have that prize in hand. So simply the energy behind this and the lack of energy among the warring parties who've exhausted themselves in what was Israel's longest war, what was a war that really laid waste to the Gaza Strip, destabilized much of the Middle East. I think everyone really came together and decided it's time to put this to a close, and decided that Trump had the best formula and the best chances of getting that done.
Bloomberg's Dan Williams in Jerusalem. Thank you so much. Now let's bring in Dalia Fahmy, Director of International Relations and Diplomacy and Associate Professor of Political Science at Long Island University. Dalia, again, it could be a historic moment, as we were just talking about with Dan. What do you see as the chances of this ceasefire actually leading to a more permanent peace arrangement in the region?
So, of course, there are 2 million Palestinians waking up this morning in Gaza without the hum of the drone. And so, of course, that's a welcome moment. But in terms of how do we understand what the reality is, we don't know the details of this peace plan. We don't know what the agreements are going to be, and it's actually not really hashed out yet. What we do know is that there's the beginnings of a hostage exchange that should perhaps begin on Monday. But beyond that, the details have yet to be agreed upon. So what is, for example, the future of governance in Gaza going to look like? What is the future of withdrawal? We know that there actually will never be a complete withdrawal if we just look at the 20-point plan. It will be either a one-state or a two-state or perhaps a different model. All of these questions we do not know. But unfortunately, what we do know from what happened in the past is that there has been an abrogation of peace plans and agreements, and we have been in phases of peace talks in the past that have been rendered to the wayside. You can only even look to Lebanon, where, for example, there was a peace deal with Hezbollah, but Israel has violated it over 2,000 times with different airstrikes. And so if you think about what the prospects for long-term peace, we can't answer these questions because we simply don't know. What's become clear is we're not certain what the future of Palestinians and their own governance is going to be, what the future of perhaps Arab participation is going to be. Are Palestinians going to be able to return to their homes tomorrow in the north? We know that the answer to that is no, for example. And so there's a lot left on the table to be ironed out and decided. But there's more left on the table than has been. So, of course, today might be a moment of reprieve, but it's still a wait-and-see game.
How much credit does President Trump deserve for getting this across the line?
So when we know, for example, that Jared Kushner, his son-in-law, is part of this delegation that went to Sharm el-Sheikh, Steve Witkoff, the Strategic Affairs Director in Israel, Ron Dermer, and even the Prime Minister of Qatar himself, Sheikh Mohammed Abdulrahman bin Jassim Al Thani, is there. When we saw these big names heading to Egypt, we knew that something was going to come of it. And President Trump putting his kind of finger on the scale the other day and saying that something had to come of it signaled that perhaps we're going to see something. Of course, the fact that on Friday the Nobel Committee announces the Peace Prize, President Trump has been hinting at this for a while, and of course, technically, in the greater scheme of things, this is nonsensical. But for him to also be working on his legacy, to continue to talk about, for example, as he did at the UN, that he's solving problems that those before him could not solve, is part and parcel of what he's been trying to do. But if you remember, when Prime Minister Benjamin Netanyahu was in D.C., was in the Oval Office with the president, and President Trump told him to stop, Israel did not stop. And so it's not clear what the outcome is going to be, but we do know that President Trump did put his finger on the scale, use the leverage of the White House in the United States, and perhaps move this further along. But again, the details have not been fully released.
Yeah, and looking ahead to the second part of this peace plan, what happens next with the reconstruction of Gaza, the rebuilding of institutions, the governance of Gaza? How big of a role do you expect Arab states to play, especially with the establishment of this international security force at some point in the future? Is this going to be instrumental in terms of determining whether this longer-term peace plan is viable and that you actually need the buy-in from Arab states as well?
So one of the biggest failures of this moment is that the international community did not put forth a plan together. Short of that, the Arab countries do need to be part of this peace plan, especially in terms of building and governance towards the future. But Palestinians need to be centered in this, and we have not seen evidence of that. We also have the Blair plan on the table, where there would be an international governing oversight committee. What does that mean? What does that look like? So there's a lot of questions in the air, but what has become increasingly clear is that it's not sure or certain that there will be a level of Palestinian self-determination. And I think that's what needs to be ironed out, because without Palestinian self-determination and a prospect for real statehood, then the conflict has not really been ended. We have to talk about these deeper things. And so if this is a moment for a reprieve, for folks to get their names on paper, that does not mean that this is a long-term peace plan, that this is just perhaps something for the moment. And the big test of this is going to be, are Palestinians going to be able to return home to whatever is left? We know that 90% of the infrastructure has been destroyed. And it, again, begs the question of what is the future? Who's going to be part of it? Who's going to have a stronger voice? We know that the Arab countries need to be part of this. We know that Palestinian voices need to be centered, and that has not been made clear as of yet.
Dalia, as ever, great to have you on the show. Dalia Fahmy, Director of International Relations and Diplomacy and Associate Professor of Political Science at Long Island University. Thank you. Well, still to come, we get the market outlook from Emirates NBD's Maurice Gravier as the risk-on mood is reignited and haven demand eases. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. The risk-on mood is extending from Wall Street to Asia as China goes back online. Min Lo is on top of all the action from our Hong Kong studio. Min, walk us through it.
Yes, Jumana, Asian stocks firmer today after a very strong reopening from mainland China as they return from the Golden Week holiday. But here you can see Hang Seng is pretty flat, but Nikkei leading gains here, 1.4% higher. This is because of the SoftBank story. SoftBank, by the way, bottom of the screens, is gaining by 11% after it's announced that it's acquiring the Swiss conglomerate ABB's robotics arm, and that's raising expectations of its profits in the AI sector. And this is just the latest in a string of AI-related investment that SoftBank has been announcing of late. But flip the board, let's take a look at China. That's the main star of today, and we're looking at onshore markets surging 1.6%. It's a tale of two stories here, because obviously we're looking at the travel data, which is looking a little bit tepid, especially if you look at box office numbers, retail and catering as well, not as good as previous years or even as good as the Labor Day holiday. But investors are looking past that because the biggest gainers in the the CSI 300 in terms of sectors is the tech index and the materials index up by 5.6%. So you flip the board, take a look at some of the mining stocks. We're looking at here Jiangxi Copper, limit up at 10%, Shandong Gold as well 10%. We're looking at really huge gains here after the rally we've seen in the AI sector. These rare earths are being seen as something that is very in demand to feed that AI euphoria, right? The need for rare earths to fund, to build data centers and AI-powered electronics. And just to show you the contrast here, you flip the board, take a look at some of the airlines and travel stocks. It's a sea of green because of the restrained consumer spending during Golden Week.
Yeah. Min, thank you so much. Min Lo in Hong Kong. Well, gold has retreated from a record high following a torrid rally that saw the metal breach $4,000 an ounce, and we're still holding above that. Profit takers are in the driver's seat as geopolitical risk eases. Joining us now is Maurice Gravier, Emirates NBD Group CIO Wealth Management. He's got a big smile on his face because I know that you've been positioned in gold. So quite the rally. Do we stop here at 4,000? Does it keep going? What's the view?
I think that over the short term, we have no clue, as always, over the short term. But the long-term drivers are still in place. And yes, we are overweight gold for 2 years now, and it's been quite a ride. The long-term drivers are still here.
What are the long-term drivers?
It's about gold is the only neutral reserve asset that you have, because the dollar is not that neutral anymore. It's as simple as that. So it's central bank buying mostly, and people looking for a store value. And maybe Bitcoin is a bit too volatile, and still people have some reservations about that. So. So gold is...
if the dollar starts appreciating again, would that dent some of your hypothesis? Because it suggests that people are comfortable once again owning the USD as a reserve currency? I mean, they obviously never completely restarted. I mean, it is still the world's main reserve currency, but the performance this year suggests that at least some portfolio reallocation has taken place.
It's an excellent question, and it's the kind of question on which we are scratching our heads for 2026. 2025, we could understand. It was kind of a Goldilocks with a twist that we call the winds of change, new policy, new technology. It did better than we thought. Very happy with the returns, and now 2026 is complicated because, including you mentioned, the drop in the dollar, we could see it, but minus 10% in 8 months is really massive. So yes, if the dollar regains traction, it's not very good for gold tactically. Still, gold has a role to play in your portfolio.
And also unlikely to be repeated. When you think about the macro for certain drivers for the USD, for gold, is it your view that we're going to get a super dovish Fed going into next year? I mean, most recently, the minutes suggested actually some hawkish upside, that there are reasons for them not to be cutting aggressively here because of the uncertainty around inflation.
Of course, it's the uncertainty around inflation. Now, what we have is resilient growth in the US without job creation. So they have always, frankly, to do at least 2 more cuts in the short term. That's what we expect for this year. Then we are, let's say, 5 cuts away in total from what they call the neutral rate at 3%. So going accommodative, they have no reason because of the inflation risk. But going to neutral, I think they do. And the thing is that with no job creation, at some point you have a demand issue maybe, and so inflation risk become lower.
Yeah. How are you feeling about AI stocks? I mean, it's funny. Yesterday we had a brief respite in the AI rally, and everyone was saying, a massive rethink is going on. We had those Oracle numbers disappointing on their profit margin for their cloud servicing business, and people thought, okay, well, maybe there's some caution coming in, but then actually it continued overnight. Yesterday, Nasdaq had its best session in 7 weeks. AMD stock is up 40% since it announced the partnership with OpenAI. If you're not in AI, you're missing out.
Yeah, of course. And frankly, we are in an interesting moment for AI because we are in a capex race with all reasons to be. You need to be in AI. Everybody needs productivity. There's no question. So it's not a time when investors will expect the immediate return. So it's not a question of return. Then you see that these hyperscalers, they are not borrowing money, tapping the market to spend money in stupid projects. They are putting at work the cash they accumulated over decades pretty much. So it's quite sound. And even valuation-wise, of course, it's on steroids. Is very volatile, but you pay Max 7, I don't know, 35 times. It's the same P as you had at the beginning of the year. We are not overly bullish, but certainly we're in.
Yeah, you think it still has some legs to go?
Yeah, because currently the market will not ask these hyperscalers to deliver return, and in a way they don't need to. The question will be on 2026 and beyond. We think we may switch from AI euphoria to AI anxiety at some point, definitely, but it's not now.
Yeah. What would be the catalyst, do you think, for market perception to switch from euphoria to anxiety?
We see a double anxiety, and again, it's one of our themes probably for next year. First, we have to see the return at some point, but then the anxiety is if we see these big returns, which mean big gains of productivity, what is the impact on the society, on the labor force? We're talking white-collar jobs, which represent the bulk of the world consumption, and I think we're not done with the AI in its various forms. Currently, we are in capex phase. We don't expect return. It's a race. We're in.
Yeah. Okay, Maurice, a great place to leave it. Thank you so much. Maurice Gravier, Emirates NBD Group CIO of Wealth Management. Now for some of the other stories that we're looking at today. HSBC plans to take Hang Seng Bank private in a deal that values the lender at $37 billion. The move will ramp up its exposure to Hong Kong while allowing Hang Seng Bank to offer its customers a wider range of products. The price was set at 155 Hong Kong dollars a share in cash, a premium of about 30% over the last closing price. The publicly listed shares would be cancelled under the proposal. HSBC shares fell while Hang Seng Bank shares surged towards the purchase price.
This is an investment for growth. This is an investment in Hong Kong, one of our home markets and one of our key markets. Hang Seng is an iconic bank in Hong Kong. It's a leading local bank. It has a fantastic customer franchise, have a very strong financial position. It has a cultural distinctiveness. And the idea here is to effectively take private Hang Seng by retaining its distinctive customer franchise, by retaining its branch network, its own customer proposition.
And still to come, Adnoc's listed units are set to pay out $43 billion in dividends by the end of the decade. We talked to Youssef Salem, CFO of Adnoc Drilling, a little later in the show. This is Bloomberg. Saudi Arabia is said to be seeking a rare $10 billion loan to help fund its ambitious economic diversification plan. Bloomberg sources say the Saudi Ministry of Finance is speaking with banks, including Wall Street lenders. The loan is part of Crown Prince Mohammed bin Salman's strategy to fund the nation's $2 trillion economic transformation. And Riyadh Air is launching its service with private corporate flights to London and Dubai for its owner, Saudi Arabia's Public Investment Fund, and its staff. This temporary measure is due to delays in receiving new Boeing 787 aircraft. The airline plans to start selling tickets to the general public in December once the planes are delivered. And coming up, oil prices edge lower as traders focus on steps towards ending the war in Gaza. We are bringing you live pictures. This is from Tel Aviv Hostage Square, where many of the families of the hostages are cheering in anticipation of their loved ones being released in the coming days. We'll talk more about the plan next. This is Horizon's Middle East and Africa, our top stories this morning. U.S. President Donald Trump says Israel and Hamas have both agreed to terms for the release of all hostages held in Gaza in exchange for Palestinian prisoners and detainees, in a deal that could see the devastating two-year war come to an end. Oil and gold both edge lower as traders focus on these cooling tensions in the Middle East and higher U.S. inventories. And the U.S. has approved Nvidia chip exports to the UAE under bilateral AI agreement in a tangible sign of progress on the deal announced nearly 5 months ago. It's just gone 8:30 a.m. across the Emirates. I'm Jemana Bersachi in Dubai. Well, we are waking up this morning to a breakthrough on phase one of the Trump-Gaza deal, with all sides agreeing to the release of hostages. President Trump suggesting that this could happen as soon as Sunday, possibly Monday. And we were just showing you some live footage of the families of the relatives of hostages live from Tel Aviv celebrating. And of course, earlier on, we were also showing footage of many Palestinians celebrating as well the announcement that phase one of this deal has passed. We're also going to talk about the longer term ramifications and whether this is just a temporary ceasefire or the first step towards a more more drawn-out, longer-term peace plan in the region. So that is the focus for today's show. And these are live images from Tel Aviv. Now, let's go back to markets and talk about some of the price action there. We saw Wall Street end in the green yesterday, a bit of a dip 24 hours ago. There was some questioning the sustainability of the AI rally. Not the case yesterday. NASDAQ had its best session in over 7 weeks, ending strongly in positive territory. AMD, one of the stocks in focus, it's up 40% since it announced that deal with OpenAI. So once again, the AI story seems to be intact. Today, futures moving sideways, not doing a whole lot. European markets down about 0.2%. Keeping a close eye on French politics. President Macron suggesting that he could be announcing a new prime minister by the end of the week. So some progress there. Gold still above $4,000, slightly lower this morning, down 0.1%, but still continues to lead the charge in terms of assets performance this year, up more than 50%. And then Brent slipping a little bit, down 0.5%. We're just below $66 now, on back, you could say, of some of the easing geopolitical risks in this part of the world. So that is the picture for Brent and the energy complex. Let's go back to our top story. President Trump says Israel and Hamas have both signed off on the first phase of a peace plan to end the war in Gaza. In a Truth Social post, he says all hostages will be released very soon and Israel will withdraw its troops to an agreed-upon line. If the agreement holds, it would mark a major step towards ending the 2-year war and a major diplomatic victory for Trump. Let's speak to Bloomberg's executive editor for Middle East, North Africa and Russia, Stuart Livingstone-Wallace. Stuart, what do we know about what has been agreed on?
I mean, it's hugely consequential, I think. As you know, over the last few days, there's been pretty much radio silence coming out of Egypt, so we really didn't know what was happening. And then we had sort of some of the big guns showed up and joined those talks, and then seemingly, suddenly we have phase one of a deal. And it really is the most progress that we've had in months, months and months and months. And it sounds like all sides are agreed to this. We've had statements from all the main parties, and including the mediators as well. So it does look like it's going to go ahead.
How is this likely to be received by members of the Israeli cabinet who would not and have not been wanting to see an end or a quick end to this war in the absence of a full disarmament of Hamas?
So we anticipate that the cabinet will meet at some point today to ratify this first phase. I mean, it must be said in terms of the hostages, there's probably not going to be any disagreement about that. There may be some quibbling about which Palestinian prisoners get released, because I know at least on the early list there were some people on there that they're going to be very squeamish about releasing. I think it gets more tricky when you move into the sort of the second, third and so on phases when it comes to Hamas disarmament, post-Gaza governance. These are really tricky questions. But in terms of this initial phase, hopefully there won't be too much opposition there.
What guarantees, I mean, at this point, again, we don't have a lot of details, that do we have that there is going to be an enforcement mechanism to ensure that both sides actually do stick to the terms of the arrangement? Hamas on disarmament, Israel on withdrawal?
Yeah, those are really good questions. Again, I think for now everyone is focused on this initial phase. And that in itself is going to be quite complicated. Think about the logistics of trying to get that many people out of a war zone in areas that are heavily populated by the IDF, amongst others. And then, we'll see after that. Trump has spoken about Monday as a possible day for the release. Again, he's saying he may come into the region either just before or just after their release. So I think there's huge optimism for now, at least, that, we are going to take this big step forward.
Yeah, and certainly President Trump is throwing his weight behind it. Stuart, thank you so much. Stuart Livingstone-Wallace, Bloomberg's executive editor for Middle East, North Africa and Russia. Thank you. Now, oil prices have retreated as traders assess signs of cooling tensions in the Middle East. For more, we're now joined by Nadia Martin Wiggen, director at Svelland Capital. Really good to talk to you again, Nadia. I actually wanted to talk to you about metals today, but we have this breaking news from the region. Your reaction, please, on how you think oil is reacting this morning. We're down 0.5%. How much of that is actually some of the geopolitical premium being unwound?
Thank you. It's great to be back. I mean, it probably is some of this geopolitical being wound back. Some consultants have said that there's up to $5 a barrel priced in currently in geopolitical risk. But as you just discussed, is this a real ceasefire and peace? We're in the first stage. And in some ways, for Svelland Capital, we actually see the risk increasing of escalation now because perhaps Netanyahu, facing an election within 12 months, may need to turn his attention to Iran instead of being purely focused on Gaza. And of course, Iran would have much higher implications to the oil market balance in terms of supply and demand because that oil has continued flowing out of the region. So we actually see that the risk premium continues to be important. And we also have the potential of flare-ups in Venezuela, Guyana, and finally, Russia. It's very uncertain what will happen there.
Yeah. Okay. Nadia, I want to turn and talk to you about the commodity everyone has been discussing the last couple of days, and that is gold, breaking through $4,000. You and I were speaking not so long ago, almost 10 days ago, about the run-up in gold, and you had $4,000 as a target. We're here now. What do you think got us here so quickly? Was it institutional buyers coming in, or was it retail sensing an opportunity to get involved in the rally as well that have brought us up to these levels? Is it speculative buying?
We see the number one driver in this market for the last 2.5, 3 years has been the central bank buying, and that has not let up. It really jumped. And last month, we see that Kazakhstan central bank was the number one buyer. And as we discussed 10 days ago, the Central and Eastern Europe has taken the helm of having the bulk of buying above the BRICS countries, which had been the driver going into this year in particular, although Poland was the number one buyer last year. In addition to that, we see that all of the ETF markets have turned to length in the last month. Previous month, we saw that in Asia, there was still some selling. Now we see buying across the board. But most importantly for us, we see that it's the central bank buying. Finally, when you discuss retail, it's also jewelry, and we're in that demand season for jewelry, especially in India and China. We've had Golden Week, we have the wedding season in India, so that should continue through this quarter until Chinese New Year at the start of next year.
But so still bullish even at these levels then. I'm going to try to pin you down again, but where could be a next reasonable target for gold to get to?
From our perspective, Svelland Capital, $4,500, $5,000 by end of next year. That's the range we are looking at because, as we discussed, China has so much more buying to do to shore up their reserves. And as we said, the U.S., Germany, they have above 77% reserves. China's only at 6.5% reserves. India is at around 13.5% in their reserves. And every month, every quarter, there are treasuries coming due for China, and they can redeploy that into buying gold.
So gold has got all the attention, but other metals have also done extremely well this year. Yesterday, we had a chart up of an ETF tracking metals massively outperforming the S&P this year. You're seeing it in copper, you're seeing it in aluminium. How much of that is just sort of rallying in sympathy with gold, and how much of it is, in the case of copper and aluminium, to do with also the euphoria around AI and the build-out of these data centers and the requirements for some of these materials in the build-out of that infrastructure?
So in our view, we separate the base and precious metals market. Silver is the one that overlaps between the two because of its use in solar panels as a base metal and in precious metals. When we look at copper and aluminium, this is really pointing to the tightness we have in supply and the lackadaisical attitude of the market that was really encouraged by the Trump election victory, that everyone or the market reacted that we would have tariff wars, and that is bad for demand and infrastructure spending. At Svelland Capital, we were much more skeptical about the effect of broad tariffs and if they would be implemented. And what we see that any type of supply shock, as we've seen in copper with Grasberg, which on the 8th of September, we had the second largest mine in the world have to be shut down. The market didn't hear about it for 2 weeks. And the market right now is assuming it's going to be up in Q4. And we are very skeptical. It's extremely muddy. This is a very complicated mine to run in general. And frankly, it may never be up. That's 3 to 4% of the world's copper supply in a market that we already saw as being short in terms of the S&D this year and skyrocketing in shortness over the next decade. We need 1.5 times more copper than what is being currently produced within the next 10 years. And it takes 18 years to get it up and running full life cycle. When you ask about data centers, yes, it's important for copper, but that's only 6% of the demand growth that we see coming in the next decade. Number one is EVs. Number two is renewable generation. Number three is grid infrastructure. Number four is charging infrastructure. Now, we also have general economic growth, and then we suddenly hit the data center proportion. But of course, data centers is a part of this. Aluminium, that's a substitute for copper, an imperfect substitute, but of course it is a substitute. And it's been a very shorted market this year off of this Trump election, off of concerns on the geopolitical side. And so that's also being pulled up. China is not increasing its production of aluminium right now, yet we see demand going higher. And so this is where the market is really moving.
I love it. Also, thank you for giving us all of the contours around the numbers and the mismatch between the anticipated demand versus supply available. Nadia, really good to chat to you. Thank you so much. Nadia Martin Wiggen, Director at Svelland Capital. Well, Russian strikes in recent days have wiped out more than half of Ukraine's domestic natural gas production. Sources tell Bloomberg that if the strikes continue, Kyiv will be forced to spend around $2.2 billion on fuel imports to survive the looming winter. Since the attacks, Ukraine has made urgent appeals to its G7 partners for equipment repairs and air defense systems to protect energy infrastructure. And coming up, Adnoc set to pay out $43 billion in dividends by the end of the decade. Up next, we talk to Youssef Salem, CFO of Adnoc Drilling, to find out more. That's next. This is Bloomberg. Abu Dhabi national oil company Adnoc plans to ramp up dividends from its listed companies to more than $40 billion by the end of the decade. The payouts will provide its new international investment unit, XRG, with the funding to acquire global energy and chemical assets. Joining us now is Youssef Salem, CFO of Adnoc Drilling. Well, it was quite the investor majlis yesterday. So many announcements to go through. And of course, the big one was that the 6 listed companies, including Adnoc Drilling, are going to be increasing the dividend payout over the course of the next few years. A longer outlook all the way up to 2030. I guess this is a reflection of the financials and the fact that you and I have spoken the last couple of months about the strong earnings outlook. But do you have that visibility all the way out to 2030?
Morning. Thank you so much for having me. It was an incredible day indeed. For the first time ever, Adnoc holds an investor majlis. That's a combined capital markets day and more for all its 6 listed companies. We've had more than 500 investors from all over the world, research analysts attending. As you said, dividends, record dividends. Adnoc Drilling, we're paying at least $1 billion of dividends this year, including a $66 million payment immediately after the majlis. We're going to pay more than $6.8 billion of dividends over the next 6 years, at least until 2030. And to your point, we definitely have the visibility. We have 15-year contracts, which are take or pay, that allow us to have full visibility to be able to fulfill these commitments and potentially go even higher.
And even with the backdrop of slightly lower oil prices, if these types of prices continue, comfortable that we'll be able to deliver on those dividend payouts.
That's the beauty of our business. It's basically fixed price contracts for the entire duration, which are completely insulated from oil prices, from market volatility, from any other fluctuations, plus a very strong balance sheet that has less than 1 time net debt to EBITDA. So allows us to really have that visibility and commitment to deliver both the dividends as well as a constant increase in share price. Our share price increased more than 3 times effectively since the IPO, and our target prices from analysts still have more upside in them.
Yeah, and I guess one of the goals of this is to increase foreign interest in capital markets in Abu Dhabi, bring money into some of the listed stocks that are already trading. But at the same time, it also allows for dividends to be returned back to the group as a whole to fund some of those expansion activities. Is that what you say is the twin purpose of this announcement yesterday?
Today, more than 60% of our free float is international investors, all the big global key global investors, your Fidelity, your Capital, your BlackRock are all in the stock and more. So today, effectively, that value that we're delivering, dividends and growth, and you're becoming a very key vehicle for FDI and investments into Abu Dhabi, into the UAE, alongside the wider ADX.
Yeah, I want to ask you about the line about the unconventional energy program, because also that, that was really significant, saying Adnoc Drilling is rapidly advancing the unconventional energy program, strong results from the wells. Talk us through about the visibility on those projects and what it means for you.
So obviously, the UAE is privileged with a massive amount of natural wealth. Now, not only the conventional resource, we're also unlocking the unconventional, the shale, the rock, oil and gas. We're using latest technologies and AI to be able to do that. That's why we now kind of amassed 140 patents under our technology platform, Enersol, to allow us to unlock things more efficiently. Unconventional wells that we started taking us 40 days to get that oil and gas out of the ground, we're now doing it in 13 days, and that basically contributes to the overall gas self-sufficiency that the UAE will achieve, as well as increasing gas exports by us unlocking more resources.
Yeah, and do you have visibility on the timeline by which that production can come to market?
Correct. So by 2030, we'll have up to 1 billion cubic feet of gas, which means we need to drill more than 300 incremental wells. To put this into context, we're currently drilling around 800 wells a year. So that's more than 40% growth in our business.
Okay. So could substantially make a big difference to the bottom line. And of course, Adnoc Drilling is involved in the testing, the exploration. Once the decision is made to go ahead with the production, how does the scope of your work change?
Correct. We're basically a fully integrated kind of drilling and services company. We're the largest in the world by market value and the fastest growing. We're able to do everything end to end on the well. So for us, effectively, as that goes ahead, we're the main beneficiary as the exclusive driller in Abu Dhabi. Any growth that happens in Abu Dhabi, in Adnoc, in the country via oil and gas and other natural resources, Adnoc Drilling is the unlocker of that.
Yeah, a good place to leave it. Youssef, thank you so much. Wonderful to have you with us on such an important day also for Adnoc. Youssef Salem, CFO of Adnoc Drilling. Now, coming up, the U.S. has approved Nvidia chip exports to the UAE under bilateral AI agreement. The license is seen as an initial step in implementing a controversial deal that could serve as a blueprint for American AI statecraft. Details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. The U.S. has cleared the way for Nvidia to export billions of dollars worth of advanced AI chips to the UAE. The move is part of a broader AI pact between Washington and Abu Dhabi, with the UAE pledging massive investments in the U.S. For more, we're now joined by Bloomberg's managing editor for economy and government in the Middle East, Paul Wallace. While this is a Bloomberg exclusive, clearly has been a massive point of debate between the U.S. and the UAE around access to certain Nvidia chips. How significant is this breakthrough?
Hi, Jumana. I think this is a pretty significant moment when it comes to the US's AI statecraft, if you like. So the UAE and the US sort of earlier this year announced huge sets of deals for the UAE to import billions and billions of dollars of the highest end Nvidia AI chips. AI is seen as absolutely crucial to the UAE for its development, and it is putting a huge amount of money to become an AI hub and a data center hub. There's been a lot of back and forth between the US and the UAE over this. There are divisions within the White House. Not everyone within the White House and the US administration believes that countries like the UAE should get so many high-end chips. But the fact that they've now started, and on quite a big scale, according to our reporting, is significant. And it's one of the first major instances of the US allowing for the export of high-end Nvidia
chips. And how does this deal fit into Trump's perhaps broader push into the Middle East, forging closer ties with some of these Arab Gulf states? In this instance, it's in tech, which, as we know, is a key pillar of UAE's vision. But at the same time, perhaps thinking about countering some of the influence that China has in this part of the world.
Very much so. And although these deals weren't so much announced when Trump visited the Gulf, he visited Saudi Arabia and Qatar and the UAE in May, they were sort of, in many ways, very much touted, and Trump was very much in favor of them. As we know from his first term, and I think even more so in his second term, he wants to be close to countries like the UAE, Qatar, and Saudi Arabia from a business perspective. And this is huge for him and his foreign policy.
Yeah, absolutely. Well, not his only big win today. Bloomberg's Paul Wallace. Let's get you to some live pictures from Tel Aviv. Celebrations have broken out on hopes that the 2-year war in Gaza could be coming to an end. U.S. President Donald Trump says Israel and Hamas have both agreed to terms for the release of all hostages held in Gaza in exchange for Palestinian prisoners and detainees. Trump says they will be released very soon, with Israel withdrawing its troops to an agreed-upon line. Now, the U.S. president says he will probably head to the region in the coming days and told Axios he may deliver a speech at the Israeli Knesset. And there are local reports suggesting that the ceasefire could come into action as soon as around midday local time. The deal still needs to be taken to the Knesset to be voted on later this afternoon. But what we do know from early signals in the morning that all parties involved, that includes Israel, Hamas, the mediators, have all endorsed the plan and have also reiterated that the plan, the phase 1 of this plan, has now been agreed on. So a big day in the region. And there's just some footage that's coming through from Tel Aviv Hostage Square. Many of the families of those hostages eagerly anticipating further news on the timing of the release. What we do know is that from an interview that President Trump gave with Fox News shortly after the announcement, he hinted that the release could come as soon as Monday, and also suggested that he himself could be flying to the region as well. Major development, major breakthrough. We're going to stay on top of it throughout the course of the morning. And these are those live images. Okay, that is it for Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.